please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I think IndusInd's numbers are just flashing for you. 1,035 crores is the net profit number. That's bang in line with what the street was estimating. 1,033 crores was the expectation. So it is a growth of about 23% that you're seeing as far as the profitability is concerned. No problems there. I think there are no problems with the gross NPA numbers as well. They're just flashing for you. 1.15% is what you're seeing in terms of gross NPAs versus 1.17%. So it's stable asset quality as far as IndusInd Bank is concerned. That's another plus point coming in. So the two internals that we have as of now, one is for now the gross NPAs are stable, no deterioration there. The net NPAs are unchanged, no deterioration as far as that is concerned either. And the profitability, 23% growth is what you're seeing as far as the net profits are concerned. Just need to get some more details out in terms of, what the NII number is. 2,133 crores is what we are estimating, which is a growth of almost about 20% or so. I don't have the NII number yet, and the press release isn't opening, so I'm just going to wait for those numbers to flash. As of now, numbers seem absolutely stable. Just the prima facie, 2,122 crores. Okay, that as well is bang in line with expectations. 2,133 crores was the expectation. So that's about a growth of 20% that you're seeing on the NII, 23% on profitability, and stable asset quality as of now, the initial numbers. Okay, the provisioning number has also come through. I think it's 350 crores, if I'm not wrong. Okay, there you have it. So that on a quarter-on-quarter basis is flat. So no major up move as far as provisioning is concerned either. So the numbers for now, at least what we have, looks okay. Stable set as far as no deterioration in asset quality, and good numbers, top line growth of 20% and bottom line growth of about 23%. We have a couple of guests joining us as well. Lalitab Srivastav of Sharekhan is with us. We have our research analyst Abhishek also in the studio. Lalitab, let me start with you. How do these numbers look?
Yeah, number looks pretty good in terms of, top line, bottom line. On a sequential basis, actually, gross NPAs have improved by 2 basis points. I think that is a good thing. And so overall number looks quite in line.
All right. So Sri Shankar is also joining us. Hold on, Lalitab, over there. Sri Shankar, coming to you. The stock really took a beating as a knee-jerk and then is trying to just sort of digest these numbers. Have you got a sense of the kind of loan growth that is there, and what are your first reactions on these numbers?
So far, so I can't comment much on it because I don't think it has come in BSE. So I'm just looking at BSE and I can't see that on the screen there.
Okay.
So it's too early for me to make a comment on the numbers right now.
Sure. I'll just take you through the numbers very quickly, Sri Shankar. For now, the asset quality is absolutely stable. No problems at all over there. In fact, I'm just looking at the gross NPA absolute number as well. It's coming at 1,740 odd crores in this quarter versus 1,704 crores last quarter. So quarter on quarter as well, asset quality seems to be absolutely stable. No major deterioration there. In fact, the stock is now recovered. It's moved into the green. The bottom line growth is 23%. Top line growth is 20%. So, these are the basic numbers that we have. Abhishek is also here with us. Abhishek, anything more that you're picking up?
See, the NII growth is the lowest in last, let's say, about 8 quarters. So the NII growth is at 19.6%. So there is continuous pressure on the net interest margin because the NII has been declining while the balance sheet is picking up. So your advances growth is at 28.4. Now this is not in the press release. I've just done a back of the envelope calculation in terms of net NPA in absolute value divided by net NPA ratio. So that gives me around 28 to 29% is the kind of loan growth that might have happened. We have to wait for the press release and for the presentation to come, but this is just a back of the envelope calculation which shows that loan growth remains strong. However, the net interest margin has been under pressure, and we have been highlighting this in our preview links also. The net interest margin is expected to soften. So in your P&L, while the NII growth growth is below 20% level for the first time in their history or in last 8 quarters. The net interest margin based on the rise in the denominator, that is your absolute balance sheet growth or the advances growth. Therefore, net interest margin might have been under pressure as per the calculation that I have.
Okay, so this loan growth that you've calculated, I mean, ballpark 28-29%, it compares to 28% last quarter as well, and which is a very healthy run rate. I mean, it's higher than what the street was estimating. And given that we've had a strong quarter as far as CV sales are concerned, they have a huge CV book as well. This is reflected into their strong loan growth. Siddharth Purohit of SMC is also with us. Siddharth, quick thoughts on these numbers. Asset quality looks to be stable. Loan growth has been good. 23% profit growth. Your view on the numbers, and more importantly on how you would approach the stock now after the 20% rally it's seen this year?
Yeah, the headline numbers really looks impressive like any other quarter. Loan growth has been fairly strong like last quarter as well. And provisioning, yes, there is a little rise even on what I expected initially, but I think it's still under control. And there is a sequential improvement in asset quality as you have reported. But in fact, last quarter there were some issues with regards to some divergent related accounts. So maybe it had gone up. And with strong balance sheet growth, in fact, asset quality also could look better. But broadly, all the parameters looks quite satisfactory during this quarter. Now, when you talk about what is the stand going ahead, I believe backed by the consumer lending, which is growing pretty strong, whether CV sales or maybe, passenger car, tractor, all these numbers are really strong as far as the industry is concerned. And IndusInd being a major player in that is likely to continue to benefit out of it. So we have a positive stand on the bank as of now and maintain our positive view on it.
Okay, so you have a positive view on the stock, but just wanted your thoughts on how to approach it valuation-wise, because, currently if you take a forward-looking FY20 price to book, it trades at about 3.5 times, so it's not cheap by any standards. Given these numbers, given the fact that asset quality is stable, loan growth is good, do you think it will continue to enjoy this kind of valuation premium?
Certainly, I believe that valuations premium will continue to be there for IndusInd. Primarily, the reason being there are very few banks where you see asset quality remaining stable, whether it is PSU or private. I mean, bearing HDFC Bank, we have not seen other banks really reporting this stable kind of an asset quality. Now, the underlying business, what they are into, like as I said earlier, consumer lending, they have been very strong. So, and this is one of the banks which has really historically delivered very strong ROE. So I believe that, 17-18% kind of ROE is what is very much sustainable for this bank going ahead. So I think this valuation is so likely to stay here. So that's why I'm not really worried about the valuations in the near term.
All right, Lalitabh, coming to you then, how do you read the valuation picture as, Siddharth was also pointing out, but the stock has had a good run. It's closer to its 52-week highs, while asset quality remains stable. On the other hand, our analysis really shows that NII has dipped for the first time in 8 quarters. How do you read into the numbers overall? And is there a change in terms of the valuations and the targets for this particular stock going forward because of the results? The stock has dipped about 0.5% right now.
Yeah, so what we see is that, this has been one of the very consistent performers in private banking space. If you see the fundamentals also, there is slight taking faster growth in the corporate banking space, which I believe can, explain the slight, decrease in the net interest margins, because the yields on corporate banking are slightly lesser than the consumer finance division. But having said that, I believe that, overall trajectory of loan growth as well as asset quality makes us believe that, an 18% ROE should not be a difficult thing for this bank to maintain going forward. So, which is why we have a positive rating on the stock, and we'll continue to maintain that.
Okay, Sri Shankar, what about you? I mean, at a time when, we have seen asset quality deteriorate for the entire sector, largely, especially PSU banks, here is IndusInd Bank that's actually seeing a tad improvement in their gross NPA figures. Do you think because of these strong internals that they've reported this quarter, the valuation premium that IndusInd Bank is seeing is something that can sustain even in the quarters to come?
That's what our expectation is, and that's why we have it in our top picks. Even our estimates of an NIA growth has been closer to 20.5%, etc. So more or less it is in line. So one needs to look at it, what has happened to that income on investments. Probably I would think that income on investments is probably that there could be something out there in terms of a slightly lower, because you have seen the yields go up and so on and so forth. So we need to have a look into those aspects. That's number one. And number two, I think on the profit numbers also, more or less, it's in line with our estimates in terms of quarterly earnings, quarterly growth. So from our point of view, it still looks robust. We have anticipated around 22% growth in terms of profits year on year. So more or less in line. So I don't think anything right now till the time we hear from the management in terms of a quarterly analyst call. Once I get the details in the presentation, if anything is there, then we'll see how to make any changes, if at all we need to make any changes on our call.
All right, thanks so much. So all the three gentlemen have a positive view on the results, at least on the face of it. But we'll wait and watch out for the management commentary to come in. Abhishek Kothari is right here. Abhishek, what are we watching out for from the management for further analysis, and any more, information you want to throw up at this point?
See, the balance sheet details will be seen very closely. What is the low-cost deposit share, which was at 44% in the previous quarter. Now, I'm just calculating YOY margins might have declined, but quarter on quarter the margins might have improved because NII has grown by 5.7% quarter on quarter, while the loan growth has been at 3.2% quarter on quarter, which shows that net interest margin might have improved slightly quarter on quarter, but has fallen off YOY. However, we will wait for the management to say strong set of numbers when it comes to balance sheet growth. It's just a niggling worry that the NII growth is not matching up to the balance sheet growth.
Okay, thanks a lot for that. So sum and substance, in case you joined in late, stable numbers coming in from IndusInd Bank, a consistent performance as far as NII and profitability is concerned, and there's been a sequential improvement in asset quality. In tough times like this, I think that's something that the street will take with both hands. With that, it is curtains down on Business Lunch. Mid-Cap Radar comes up next.